SanDisk stock has surged over 4,000% as AI companies lock up flash storage supply. In the SanDisk Stock Rises story, the pressure point is simple. The move is not only a stock rally, it reflects how storage capacity has become a bottleneck for large AI systems. The company reported $5.95 billion in revenue, $23.41 in earnings per share, and $42 billion in multi-year AI supply deals. The viewer should not treat the number alone as the whole story, because the useful part is who is exposed, what mechanism created the pressure, and which signal shows whether the issue moves from claim to follow-through. The opening read is therefore narrow and concrete. Over 4,000% sets the scale, while Q4 guidance tells us what would make the next stage visible. That framing keeps SanDisk surge tied to evidence instead of excitement. Data center revenue rose 233% to $1.47 billion, and more than $11 billion has been committed upfront. SanDisk also announced a $6 billion buyback, while guiding next quarter revenue as high as $8.25 billion. That baseline matters because it gives the story a factual floor before any reaction builds around it. The strongest confirmed scale marker is over 4,000%, while $42 deals adds the context that keeps the event from becoming a vague market talking point. It also explains why SanDisk is central to the case rather than background noise, and why the timeline or structure cannot be skipped. Without that baseline, over 4,000% can be misread. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. SanDisk Stock Rises turns on the mechanism. AI builders are paying to secure future storage before shortages disrupt model training or deployment. Binding supply deals make demand more visible than ordinary purchase orders and can protect revenue if buyers follow through. That is where a surface event becomes more than a headline. The mechanism explains whether the pressure sits in liquidity, compliance, custody, user access, product design, security, or market structure. In practical terms, the link between storage demand and supply locks is what makes the outcome matter beyond a single announcement or price move. That is the piece viewers can actually monitor. The affected side is AI infrastructure buyers. The storage supply chain is becoming a market structure story for AI-linked equities and infrastructure investors. This is the practical consequence. The event can change how people use a platform, how traders read a level, how issuers design products, or how regulators evaluate a risk. The segment keeps that effect narrow because unsupported ecosystem-wide claims would blur the evidence and make the story less useful. The useful question is what AI infrastructure buyers can actually do or observe after this event. The consequence is concrete only where that group is involved. The unresolved piece is whether AI storage demand can keep growing fast enough to justify the new valuation. That does not erase the confirmed facts, but it does limit how far the conclusion can go. The next revenue print, contract conversion, and data center margins will test the durability of the surge. This is the difference between a strong signal and a completed outcome. Viewers should know which part is established and which part still needs proof. The missing evidence matters because Q4 guidance can change the interpretation without changing the baseline facts already on the table. That caution matters while the open item remains unsettled. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is next quarter revenue guidance and delivery against the AI contracts. For SanDisk Stock Rises, that matters because they will show whether guaranteed demand becomes actual sales at scale. If that signal appears, the story can move into its next phase. If it does not, the event remains important but unfinished. The clean way to follow it is to track that trigger, not to assume the ending before the evidence arrives. The final readout is intentionally specific. Q4 guidance is the point where follow-through can be judged. Everything else is context until that signal changes.